Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is BTS. That's Behind the Scenes, a show where we share a sneak peek into the latest edition of the Business Today magazine with all our viewers. Joining in on the show with me are my colleagues Rahul Oberoi, Nidhi Singhal and also Richa Sharma joining right in on this show, and they have contributed with various articles and special reports that this newest edition has. Now, to just share a quick glimpse to all our viewers what this edition really looks like. Well, there you have it. On the cover page, you have the market veterans, the stock market veterans. You can see Vijay Kedia, Rekha Jhunjhunwala, Ambarish Palika, and also Ashish Dhawan. Now, let's kickstart the discussion with my colleague Rahul Oberoi over here, who's written this cover story. So, the first up, just to clarify to all our viewers, Rahul, why are you calling them angels of the D Street?
Okay, so Sakshi, thank you for inviting me on your show, and a very apt question. So we are, as we know that investors like Jhunjhunwala, Ashish Kacholia, Vijay Kedia are well-known investors on D Street. In fact, Ambarish Palika is a market veteran, and very few people know that they are angel investors among startups. They have invested from few lakhs to crore of rupees in startups as an angel investor. So that is why we are calling them angels.
Oh, that's an interesting one. In fact, Rahul, Angels of D Street, of course, this is going to be an interesting one because so far we just have been able to, or we were used to, of at least tracking these legendary investors or ace investors portfolios in the stock markets, but here you're giving us details of all of their holdings in the startup space as well. Now, do tell us, Rahul, what are the key takeaways? Why are they really investing in the startup world? And if you could also share with us what do they look for when they actually select startups? Because this is going to be important for all the viewers to understand who really follow these market masters very, very closely. The way they pick the stocks in the stock markets, the way they analyze the stocks, fundamentals that they keep in their mind, the filters they have in mind as well. So in startup world, what are the things that they really look for? The metrics are going to be completely different here.
So Sakshi, I talked with a couple of ace investors. So three things I liked the most. First thing, they said promoters quality is the first thing. The same they look into secondary market. And the second thing, that the investee company or the startup should be started for just for solving any problem. They is not just started for the sake of starting a startup or just launch an app and say this is our startup. This is not like that. They should be solving any problem. And for the investee company, it is like it increase their credibility. As if you get some big name in your company, then it improve your credibility among potential investors and partners in the market. So these are the key takeaways which I noticed.
Okay, that's interesting. But also give us a sense, Rahul, that what are the kind of returns that such market investors have been receiving in the startup world as compared to when they invest in the stock markets? Okay. Is there a much higher return? But also on the flip side, what are the kind of risks also?
So investing in startup space is a very risky thing. As Vijay Kedia said, you can become either hero or zero. So, for example, he invested in TAC Infosec, which recently got listed on D Street. He held, I think, 20% stake in the company which he bought at 45 lakhs 7 or 8 years ago, which worth at the time of listing was around 45 lakhs. Same in the case of Ashish Kacholia, he invested 50 crore in office. And at the time of listing, the value of his investment was around 150 crore. And at the same time, a couple of startups like Upside AI, YSG got shut down, which completely eroded their wealth. So the risk is huge, and return is also huge. So as he said, you can either become hero or zero in startup investing.
Absolutely. And also there is this risk that perhaps we do not know whether these unlisted space companies, they actually ever see the light of the day when it comes to the listed space as well, which potentially is the aim or the hope with which probably these market investors also invest. So of course, by speaking to the management, they can understand that there is a potential visibility that they may want to enter into the stock markets, but in case the regulations change, several of the scenarios change, there is always a bigger risk right there.
Right.
Absolutely. Okay, so that's one part of the entire edition that viewers you will be able to understand. So if you've been a regular viewer of Business Today television and you track the stock markets, this is going to give you a very interesting insight into some of those top investors that we track on a day-to-day basis, with the way to understand where exactly are they investing. So this will be an interesting read. But there's also a very special report on sustainability that both Nidhi and Richa have contributed to in this edition. So let me kickstart the discussion first with Nidhi, and then I'll come to Richa also. This report obviously details on how India Inc. is faring when it comes to sustainability. What are the emerging regulatory ecosystems like? What are the funding gaps like? So all of those things have been highlighted in various articles by Nidhi and Richa. Nidhi, this is the third edition of the
Right.
sustainability special report. Do tell us, over the period of years, have things improved, and how is India really perceiving the ESG space?
Right. Thank you, Sakshi. Yes, you have rightly captured it. This is the third time we are coming up with sustainability special, and it is interesting to see that 2 years back, where we realized companies are only looking at ESG because of the regulatory framework. Now, this has pivoted towards profitability. So, to give you an example, companies obviously environment, E part of ESG is focused. Companies are focusing on environment because of their carbon, reducing their carbon footprint, being policy compliant. They are now focusing on S part as well, which is employee welfare. This has helped them in reducing the attrition rate in the company. And governance really helps them in strengthening the company's perception in the market, attracting investors. So overall, what companies have started to realize is that ESG is not just a good thing to do, but it can really help them in garnering more profits. To put in some numbers over here, a recent report by SAP India says that 77% of the companies in India that they surveyed say that ESG is somewhat contributing to their profitability. And around 39% of these companies plans to increase their investment in sustainability in the next 3 years.
Okay, got that. But Nidhi, there are also several articles about climate finance, then on carbon tax as well, profitability. Amongst all these, we also have articles on, say, data centers.
Right.
So, what is that really about, and how does that have to do with sustainability?
So you'll notice that India is becoming a digital economy. Our online payments are increasing. Given the easy access to data, mobile data, everybody's online today. So be it for work, be it for entertainment, be it anything, everything digital is routed through our data centers. And to help you understand what a data center is, it's a large, super large warehouse where rows and rows of servers are stacked against each other. They are computing machines, high power computing machines stacked. And what they do is they just process all the data that we are consuming. Everything is routed through them. So at such a large scale, when data centers are running, they are a huge source of power. They consume a lot of power. They're power guzzlers. And with so much equipment running 24/7, they produce a lot of heat as well. So the power requirements really goes up for cooling, for power, um, for turning these machines on all the time. So the article really looks at that how this industry should look at greening their footprint as well. Because the way our digital economy is growing, there are more and more data centers coming up. All the big players, even the smaller players, even the traditional business houses like Adani, they have entered into this space in form of co-location data centers. So the article talks about how they can switch to renewable power, look at more sustainable ways of cooling, invest in hardware which is efficient in terms of handling electricity, as well as with the new age AI solutions coming in. So what all these data center players should invest in. Point to note over here is when we talk about ESG, and a lot of big houses, a lot of this big business houses are committing to net zero. They also want their data to be green, their data footprint to be green. This is
Right.
where green data centers would come in.
Okay, interesting. Let me also bring in Richa into the conversation now. Richa, do tell us, when it comes to the banking space specifically, how prepared is the entire banking sector to climate related risks truly?
Thank you, Sakshi. So, as we say that the money is the most important part for any transition. And when we talk about transitioning or decarbonization, so money plays an important role. So there was a survey which was done by a non-profit group, and they studied some of the major 30 banks with a 29 lakh crore market cap. And they found that Indian banks have started taking baby steps. There are certain green products, like you will find green bonds, green fixed deposits. They've started investing in the renewable sector. But when it comes to themselves, are they prepared? Are they hedging the climate risk that is posed? That is not being done to the extent where they need to take measures. So the work has started. In fact, RBI has also issued in February that they need to draft disclosures of climate-related risks that these banks face. So the banks are preparing, they are taking measures, but there are certain loopholes. The most important is the preparedness. So among the banking staff and professionals, they're not that prepared. They don't really understand the climate risks and what it can pose to them or their future growth. So, especially the public sector banks, they've been investing a lot in the fossil fuels like coal, thermal power plants. So, they are at the biggest risk. That is what that survey found.
Okay, Richa, but when we talk about ESG investment scenario and in India and how to really make it attractive, that comes as a key question. What are the things that you have discussed with the people you have spoken to?
So see, in ESG investments, they've started, India is still in a niche space in the Western markets, especially in the US and Europe. They're big funds. But in India, it started way back, quite some 3-4 years back. So in 2019, the funding, it was like 3,000 crores, and till 2021, it reached 12,000 crores. So there was a lot of push. But after that, it has become stagnant. It has not increased in last 2-3 years. So investors in India, especially, they're not that much interested. The returns are not that high in ESG. So when I spoke to different industry players, so the reason they found was that one, we don't have a green taxonomy. So taxonomy is basically what defines as green. If you're investing in a product, if you're investing in a company, if you're investing in a sector, whether it is green or not. So who defines that? So India still doesn't have a green taxonomy. Secondly, for the ESG, we don't have sectoral ESG. If an industry is in, let's say, if it's a coal industry, so there are certain norms as per the SEBI guidelines. There are 54 metrics they have to fill in, but that may not be the same metrics, let's say, for an IT industry. So for them, it won't be that pollution. They may not be causing what a thermal plant caused, but they all have to fill a similar form if they meet it or not. So that is kind of a thing that needs to be revamped, for industry specific things. Plus, there is no kind of push from the government. We don't have a kind of mandate for funds for the companies to have, ESG investing, which is there in foreign countries where the mandate comes from the government that this percentage of things should go in ESG investments. So those three things needs to be worked out. What industry players feel would further push up the ESG investments in India.
Okay, got that. Well, thank you so much, Richa, Nidhi and Rahul, for sharing with us all these insights from this latest edition. I'm sure there is enough and more for all the viewers to really look at into this specific edition. So I'm reiterating for all our viewers, the edition is up into the stand. So please go ahead and grab your copies. I have already got mine as well. This is sure to give you a different insight into something that is a rarity as well, something which is not very commonly found. When it comes to the investor's perspective, how do we look at the doyens of the D Street, which are now also angels of the D Street? And of course, when it comes to sustainability report, this is also going to be giving you a lot more insight. With that, we wrap up this very special edition. Many thanks, Rahul, Richa, as well as Nidhi, for giving us all that insight. And thank you, viewers, for tuning in onto this special.